Let's get right to the floor show here with the 10-year yield at 3.12%, certainly off the 3% that we saw yesterday. Fitz-Gerald Group Principal Keith Fitz-Gerald joins us along with trader Teddy Weisberg. Okay, is daily right, Keith, and is the market right to perceive that both the rate hikes and the jawboning about rate hikes are starting to work, which in turn is improving investor sentiment?
Tough call. Opinions are like belly buttons, Liz. Everybody's got one. I think the Fed missed this call in formation, so I don't place a lot of trust in what they have to say, unfortunately. What I think's happening is people have simply realized the sun's going to come up tomorrow, and they're getting on the gas. Institutional traders are moving in because they can't afford to miss it. Retail traders are moving in because they're seeing companies, they're seeing people sell Apple, they're seeing all kinds of other great products on the moves they use. They know they have to eat, they have to buy medicine. That's a good thing.
And do you see that it is the time to start picking recovery stocks, or, as the comics like to say, too soon?
There is no doubt in my mind that that is exactly the move that smart investors should be making now. Optimists make their money buying out the pessimists. So slow down your buying, buy in chunks, do things, pick your bets carefully, but absolutely play offense, because buy low, sell high is how the game has worked and will work till the end of time.
All right, we'll get your offensive picks in a minute, but Teddy, do you see this as a time to buy recovery stocks? And let me guess, maybe not, because I know you, I know your view here.
No, Liz, listen, up is always better than down, so I'm not going to poo-poo a rally. But this month, the month of June, has been a terrible month for almost all investors. In my opinion, it's been the worst month of the year. Now, maybe in hindsight, we'll say it was a capitulation month. We don't know what the market's going to do going forward, but I think the timing is very suspect. We're at the end of the month, we're at the end of the quarter, and we're at the end of the first 6 months of the year. The market has been technically dramatically oversold. So reversals in any market direction are always sharp and steep. And until I'm proven otherwise, I just think this is a bear market rally. And I think it's, quite frankly, a better selling opportunity than a buying opportunity.
Teddy, you just poo-pooed the rally. No, I'm kidding. But listen, as a bear market rally, you're calling it like you see it. Keith, I know you think the opposite here. You say it's time to scoop up some of these names. I know you already have, but what are you picking in the last couple of days?
Last couple days, we've been going to the stuff that's been just absolutely shellacked. So not surprising, that's a very short list. That's going to be the Apples of the world, the Microsofts of the world. We took some profits in Tesla today. But again, we're going right back to these names because you don't get off a winning horse in the middle of the race. And Teddy's got a point. Short-term rallies are very sharp, especially if they're in bear markets. I don't really care about that because I'm looking beyond that. We have a saying in this office, when in doubt, zoom out. And that's the way we're approaching the markets right now, especially today.
Apple shares moving higher by 1.5% today. Week to date, I'm looking at a change here of about 6.7%. Teddy, you do still have some sectors you find as, quote, somewhat interesting. Faint praise, but which ones are they?
Well, that's true, and it's still more or less defensive. I like the agricultural stocks. I like the insurance stocks. I like the railroads here. They've been beaten up pretty good. I like the defense stocks. I like the food stocks. But basically, I don't think we're out of the woods. I want to find a safe haven to get me through the next couple of months, at least until the interim elections.
You know, I'm looking at the grocery stocks today. They are all higher. Well, listen, there are a bunch of sectors that look good. The discount retailers are also up. Department stores, as we showed you, big tech, regional banks, metals. So this is a strong day. The Chinese stocks as well. But you can see right here, Kroger, Walmart, Target, everybody's moving higher on this last day of the week. Good to see you both very much. By the way, Teddy's not the only one bearish on tech. Many on the street have said...
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.